All right, guys. Hi, friends. Frankie here, and welcome to Crypto Internet, where we bring you weekly content about Bitcoin, decentralized finance, and internet innovation. I see many faces in the audience are back from last week's live event where Pomp himself created a fantastic argument for why the US needs to be pro-Bitcoin. So thanks for joining us again. Today, we have planned a very exciting conversation on the art of HODL with two of your favorite crypto personalities. We have Dan Held and Jameson Lopp. Okay, but a little housekeeping before I introduce our host. Take a peek at the green house at the top of Patrick's head and be sure that you're following Crypto Internet Clubhouse. Over the next coming weeks, we're going to have a very exciting 3-part series on how to build on Bitcoin. So our speakers will delight and surprise you, and your support is appreciated. So the time for innovation, guys, on Bitcoin is now, and we are planning to tell you all about it. Okay, so without further ado, allow me to introduce our host. Patrick Stanley is the CEO of Freehold, a crypto community development company that incentivizes crypto holders to actively participate in education and building activities. And of course, we have Muneeb Ali. He's the co-founder of Stacks and the CEO at Hiro. Muneeb is building the future of the internet through Stacks, y'all. So jump into the jungle of Google and get familiar because Stacks is literally building the next internet. Okay, so today's special guests are Jameson Lopp. He's the co-founder and CTO of Casa. And also we have Dan Held, growth at Kraken and Bitcoin educator at the Held Report. All right, Muneeb, Patrick, take it away.
Thanks a lot. Hey Dan.
Hi, thanks for having me.
Awesome. I feel like it's probably best if you two can give a brief background on yourself to people directly. I think I always appreciate when people hear directly from you.
Yeah, so a little bit of background on me. I started in the crypto space about 8 years ago, back when it was just called the Bitcoin space, and worked at a variety of different companies. First product was called Zero Block, which is like a Blockfolio equivalent in terms of functionality and popularity. We got bought by by blockchain.com. I came on board blockchain as the first product manager. Then I worked at various other crypto companies like ChangeTip, and then I went to go work at Uber and came back to crypto, co-founded a company called Interchange, which got acquired by Kraken. And I currently lead growth marketing at Kraken, so user acquisition for Kraken. And on the side, my passion and interest is in Bitcoin, and been a really big advocate of Bitcoin as a store value asset, which very much flows into the hodler narrative. So yeah, that's the 2 cents on me.
All right. As for myself, I also became an enthusiast around the same time as Dan. I ended up going full-time Bitcoin 2015 when I started working for BitGo, spent 3 years there, basically running the infrastructure for their enterprise multi-sig self-custody service that was used by a number of exchanges and other large payment processors. And then after 3 years there, and 3 years ago from today, I actually went and did a slight pivot to founding Casa, which is similar in the sense that we're using multi-signature aspects of the Bitcoin protocol to help people secure their Bitcoin. The primary difference being instead of enterprise focused, we're now individual focused, helping really the average Bitcoin user have a better HODL and really take advantage of the technology and the best practices that we've learned over a decade of very hard lessons, just trying to lower the bar for people who don't have days, weeks, months, whatever, to immerse themselves into learning all of the intricacies to the art of HODL.
All right, this is awesome. So I want to kick this off a little bit by sharing kind of like my own experience with this. So I discovered Bitcoin 2013. I think the the price of Bitcoin was like $90. Like I remember doing trades where whenever it would cross 100, I'll be like, it's too expensive, I'm not buying it. Whenever it'll dip below 100, I'll buy. And over the years, like I think like even for somebody who's like, you know, working full time in the space, even for somebody who, like I have a computer science background, so I was attracted to the underlying technology. I could see like, you know, all the possibilities and this and that. I don't think even I fully understood that Bitcoin, like how valuable Bitcoin can be in the future, right? So I would sometimes trade Bitcoin, I'll exit it, I'll re-enter it, I'll kind of like, you know, try to do different things with it versus just keeping Bitcoin for a very, very, very long time. And there was some portions of it that I did, but I think it was actually like maybe even 2-3 years ago that really the mindset changed, where I've been trying to accumulate Bitcoin throughout, but now when I was accumulating, it was literally like a one-side trade, right? It's like I'm out. Like this money that's going into Bitcoin is never coming back into kind of like fiat. And I think like the interesting thing I want to ask you about is, why is that kind of like non-obvious? That even working, at least for me, even working in the industry for like years and years, it wasn't very obvious to me that, hey, this is a one-side trade. Like the only thing you need to do is basically just exit one way and then forget about ever selling Bitcoin.
I mean, I think it's non-obvious because when people go to buy things, they're still using fiat. And so, you know, you've got fiat on the brain and you think of that as your unit of account because, you know, that's the liquid asset that you're going to use if you want to buy a house or a car or whatever. And I was certainly guilty of that for many years. And you know, when I did trades in and out of various crypto assets over the years, I ended up regretting almost every single one of them. Like the only two trades that stick out in my mind as being the best ones I've ever made are going from fiat to Bitcoin, and then going and basically dumping all my Bitcoin forks for more Bitcoin as sort of the height and mania of the last bull cycle. But other than that, pretty much every other trade I've made over the years was a loser, at least when denominated in Bitcoin terms. And I think the main reason that I don't have less Bitcoin than I do today is because I'm not an active trader, and I've spent most of my time focused on building and simply did not have my coins on exchanges to trade in the first place. So that has probably saved me from making even more mistakes.
Yeah, and I'll hop in here. So I think, you know, Bitcoin, like hodling Bitcoin for a long time, I mean, the duration that Jameson and I have, like 8 years or so, it kind of, it's counterintuitive to a lot of the practical advice you get. And whether, you know, some like basic investment advice around, okay, well, you've just had a 10x return. How would you go diversify? And so, you know, hodling, you know, we entered our position originally, and I'm going to speak for Jameson here, but Jameson, feel free to correct. We both entered our position because we feel that, you know, Bitcoin is the next gold 2.0, that it's going to be the world reserve currency. And we believe that the valuation of Bitcoin at that, if it achieves that, would be in the tens or hundreds of trillions. So for me, Bitcoin hasn't gotten to that price yet, and that's why I haven't sold. Or that's why, you know, what's funny is, you know, if Bitcoin does succeed, gold is a very boring asset. So Bitcoin should level, the volatility and the upside will eventually slow down to where in its final era, you hold Bitcoin, you feel very risk off. For me, I kind of view Bitcoin as like, it's weird to have the mindset change over time, where originally it was just perceived as like, okay, I will, you know, Bitcoin is a really cool investment, but now it's becoming more of like a philosophy, a lifestyle, and you realize that you start to, you know, denominate your worth in Bitcoin. And, you know, it's, there's all sorts of different ways to think about how to hodl for a very, very long time. I'll leave it at that.
It's funny. I'm looking at the knowyourmeme.com page of how the term HODL came into existence. And I think some of the listeners might not know this, but the original term HODL happened on a Bitcoin talk forum, and the post was titled "I am hodling," and it was misspelled, presumably because the poster was drunk on whiskey. And essentially what he does is he consigns himself to saying, listen, I'm not a genius trader, but I'm also not a noob. I think like the best quote, the most salient quote in his drunken post was, you only sell in a bear market if you are a good day trader or an illusioned noob. The people in between hold. In a zero-sum game such as this, traders can only take your money if you sell.
Pretty much. And like I said before, I'm not really a trader, but like the reason that I initially got into Bitcoin or bought it in the first place was A, because I was technically interested and I needed to have some in order just to play around with it, and B, it was not as an investment, at least in the short or medium term. And I think that I succinctly described my mindset a couple of years ago with a tweet that ended up going pretty viral, which was essentially that Bitcoin is not a get rich quick scheme; it's a don't get poor slowly scheme. So I didn't see it as a get rich quick or even get rich over the next decade type of investment, but rather that this was an interesting hedge against the fiat system, and that one way or another, it was guaranteed not to inflate away. And I had no idea what the ramifications in terms of the valuation versus fiat was, but that just seemed to me to be a much more egalitarian way of going about creating a monetary system.
Yeah, I mean, that's what's so funny about Bitcoin is I hold Bitcoin because I'm a risk averse. Like I am trying to protect myself against poor central banking policies. Bitcoin isn't the risky strategy. Holding fiat is.
Yeah, I feel like there was a very interesting point in the middle there where I think it was Dan who said that if you apply a traditional investing lens to this, you would take money off the table several times along the journey, right? Because this thing has been increasing in value so rapidly that even if people say that, hey, only if you were early in Bitcoin. Well, if you would have been early in Bitcoin, you also would have sold, right? Like if you don't truly get it, that as Jameson was saying, that this is, hey, I don't want to get poor. That's why I'm exiting to something that is stable versus something that is actually kind of like, people are printing more of an asset versus this thing is fixed. I think with that mentality shift, I don't think that's very common at all. Like Bitcoin people, not the core Bitcoin community, but I'm thinking the general population on the internet, they would look at it as an investment. They are very concerned about what price point am I entering it at, and then they are concerned about at what point do I take money off the table or exit this thing, right? And I think that's where this HODL culture becomes very fascinating, because it's kind of like education, but in a way that is very much like, let's change the mindset and let's change the culture around what you perceive of this as.
Yeah, I mean, that's, I think, also a good explanation for why the historical price does the bubble cycles that it does. And we see it go up 10x and then come down 80 or 90%, but the floor is always higher. And, I think that the reason the floor is higher is because even though we go through these speculative manias with people who are very fiat minded and sensitive to the exchange rate, some of the people who come in, or possibly some people who went through a previous cycle and have since learned, have switched over to that hodling mindset, and they're the ones that are eventually, the hodlers of last resort. They set the new floor.
What do you guys think about the GameStop sort of outsider trading that was going on with that? In a sense, they had some similar kind of virtues to the Bitcoiners, who
essentially where the only rule is HODL. And that was something that I personally thought that was very interesting, because we saw that happen the first time I've noticed, at least, in the stock market. But it was preceded by a culture that was happening on Bitcoin. Yeah, what do you all think about that?
Yeah, I think, I wrote about this in the Rebellion Begins in the Held Report, my weekly newsletter, and it was really fascinating to see this occur. I had never really seen, I'm sorry if my connection looks like it might be poor, I'd never really seen another group kind of rally behind a financial narrative like that with such a, you're kind of fighting against the system. You're fighting against the hedge funds. We're fighting against the central banks. And it felt very analogous to the Bitcoin community and the Bitcoin.
I think what we're really talking about here is memetics and conviction around the narratives and the memes. And so obviously Bitcoin has built up some really great memes over the past decade or so. There's no reason why people can't create narratives that result in a great deal of conviction if they're hitting the right chords. And so the fighting against the man, or fighting against the current powers that have been sucking blue collar workers dry in various ways, that is always going to be a compelling narrative for a decent swath of the population.
Yeah, I saw a little bit of a David Goliath type thing happening both in GameStop, but also in the Bitcoin world. Like in GameStop, there was a bunch of people who are getting together on Reddit, and they're kind of like doing their own analysis of the situation versus like sophisticated, and I'm saying sophisticated in quotes, right? Like quote unquote sophisticated hedge funds, and they're kicking ass, right? Like the organic community of people is actually giving hedge funds trouble, and they're enjoying the hell out of it, and they're making money. And I think similarly, I think Dan and Jameson, you would remember the beer whale at 600, or was it 200? I forget. And when people conquered the whale who was selling, I think there was a similar feeling that it's a bunch of small timers who just got together on Reddit, but they're beating some sort of a big investor or a fund that is actually selling Bitcoin.
Yeah, the slaying of the bear whale was one of the most fun moments, I think, in my experience. The sense of camaraderie. I even bought a little bit of that snowball. Essentially, what had happened was a big whale had I think it was $20 million worth of Bitcoin that they were selling in a gigantic limit order. And it took the Bitcoin community, I think it was a few hours to eat through that wall. But all of a sudden the meme picked up around slaying the bear whale. So if you search for slaying the bear whale on Google image search, you'll see a bunch of posters that were created. There was sort of like propaganda posters for the moment. But that was a really cool moment where we could really feel the sense of the community on rallying against this singular opponent.
Yeah, that was awesome. I think I took some very tiny shots at the whale, but I remember it. Like the people who were there with you, like they would just never forget like being there.
Yeah, and there's so many moments like that. It's a little bit kind of sad as well for some of us old timers, because almost everyone I know from back in that era is gone. There were scammers. People forget that almost, I'd say 50% of people back then were straight up scamming, not even subtly scamming, just actually scamming. But the people that I did like hanging out with, it was hard to hodl the whole way. And a lot of people were builders back in the 13, 14, 15 era. But the problem with building is that a lot of people sold all their Bitcoin to keep their business alive. And then when Bitcoin surged again, they were out of Bitcoin. And so Bitcoin hodling is, sort of like a game of survival. And what's taught me about this is not only from my experience from hodling Bitcoin, but also through startups. half of the startup game is literally just surviving long enough to outcompete your competitors, not necessarily moving faster than them. And I think, Muneeb, you've probably seen that from some of your early days looking at what startups, I think you were around at a 13, 14 wave and seeing how few startups survived there.
Yeah, I think this was actually for people who caught kind of like the Coinbase IPO yesterday. I know Coinbase gets criticized sometimes in the Bitcoin circles as well. I personally think that they brought in a lot of new users and they give optionality to people. You can exit Coinbase and you can take your Bitcoin out of there whenever you want to. But I think even their story was pretty much like, 1/3 of their company quit and left during 2014 and 2017. And a lot of their peers were pivoting into weird sorts of things. Like there was a time when the quote unquote blockchain, not Bitcoin times, where people were effectively trying to write software for banks, and those software were pretty much like databases. They weren't even like real blockchain. But Fred and Brian, they stayed the course, right? Like they're like, we'd rather shut this down or make it work, but we're not going to pivot and not going to give up. And that's now a $80 billion company on the public markets now, which is kind of lifting all boats. And I do think like this story about a lot of early Bitcoiners actually selling Bitcoin to keep their businesses alive is a very real one. Like, Dan, you're at Kraken. Like, this is the story at Kraken as well. The founder, he was selling like an insane amount of Bitcoin just to keep the exchange alive.
Yeah, I wasn't at Kraken at the time, but yeah, it's a public story that Jesse told of him selling, I think, to keep Kraken running, which just shows, I think, I've got a ton of respect for Jesse and his commitment to Kraken and how much skin in the game he put in, not just from a tears level, but from a monetary perspective. Jesse's part of the OG Kraken. The old era from like 2010, 2011, which were like basically the miner era, where a lot of people like mine Bitcoin on the laptop back in that day. So, I think it's, luckily Jesse and Kraken survived, but there's a ton of companies, and that's where I kind of was lamenting earlier about there's so many people that most Bitcoiners will hear of, including like a buddy of mine I just met up with, Jared Kenna. He created the first Bitcoin exchange in the U.S. back in 2011. Being early is the same as being wrong, and there's a whole lot of different things that didn't go right. So, it's kind of wild to see what survived this long.
Hey, Bruce, good to have you here as well.
Hey, good to see you. What a great topic, Dan. I think about that a lot, and I've mentioned it to a lot of people. There's just so many people that did so well early on, and they did everything right, and just through bad luck or just one wrong step, this whole thing has been like a 500-mile-an-hour race car race, and if you hit a little pebble, you're done. You're just wiped out. And there's like a lot of stories I'm sure and a whole bunch of other people know that you don't talk about because it's private, but some of them have been disclosed, and it's just, and then some you can just kind of observe. It's just sheer wreckage. People who had 60,000 coins and 1, 2, 3 pieces of bad luck, and they've totally wiped out and they lost everything. People who ended up owing more in taxes than they had because they traded the wrong way in the wrong time. There's a miner who had very, very highly leveraged mining gear, and he had a huge piece of the hash rate, and his break even needed to be like 430, and Bitcoin was down in like the 150, and it was like crawling back up. And I've talked to him since, and basically he had this huge amount of hash rate, and he lost his leases and stuff by like a day because he was right. Like literally a day later, Bitcoin would have been above his break even, and they would have let him keep it on by his agreement, and he would have just rode it all the way up to 1,200, and he would have been bit fury, and he ended up like bankrupt. It's just crazy. I'm sure there's a million stories like that. So it's such a hard industry. You add up a lot of luck.
Yeah, don't even get me started. I got bit by the taxation issue when I was dumping all of my Bitcoin forks, and then everything crashed after that. And I actually ended up kind of going leveraged in a way, in the sense that I ended up taking out a Bitcoin collateralized loan to help pay off all of those taxation issues and prevent from having to liquidate 5 times as much Bitcoin as I would have otherwise. And then I recall, Bruce, you recently said something to the effect of you came really close to spending a ton of coins filing for an ETF or something many years ago.
Oh, yeah. Well, I was saying I don't think I even had enough coins, but I thought the ETF was a great idea. I figured, I figured coming from Wall Street, I'd be able to push it through real fast. And I was totally wrong. It's taken 5 years. I wouldn't have been any faster than all the other people working on it. And, but you could do something like that. There's people who that would have been 1,000 coins to finance that. And there's people who had those coins who did do that. And they meant well, and they were trying to do something in Bitcoin. A whole bunch of people got into mining. There's a video on one of the documentaries, and I was at the conference. It was one of Andreas's first speaking gigs. And the Butterfly Labs guys were there, and they were a big mining company. People bought the miners and they never got them, and it was a huge historic collapse. And this guy gets up and he's like mad, and he's saying, I want a refund. And it was some absurd numbers, like 1,400 or 2,800. He's like, I want my 2,800 Bitcoin back, man. So can you imagine being that early and that lucky and that much foresight? And the guy said, I'm going to leverage this. I really believe in this Bitcoin. Someday it's going to be worth $100 a coin, and doing everything right, and then getting that burnt. And he might have, who knows? People like that lost their houses sometimes.
I mean, to survive, Bruce, those are some amazing stories. And I got 2 points to both you and Jameson. Jameson, I similarly took out a levered position with my Bitcoin with an Unchained Capital loan to buy more Bitcoin like a good degenerate. And luckily, I had a crazy over-collateralized position to where I survived March 12th, but I had a buddy call me up, and he called me up. He's like, hey, man, I'm about to get margin called. Can I borrow some coin? And I'm like, sorry, dude, I just can't do that. And, it's just, going margin on Bitcoin or just one wrong trade and you could get wiped out. And Bitcoin was only down 40% for, I think, a few hours, and it bounced back on March 12th, 2020. And, to Bruce, it's the amount of scams in this space, and everyone is pretty young, too. Like, the space is predominantly kind of like young males who are typically pretty risk on. So we all, different folks, whether they were well-intentioned or not, would come out with different mining companies, BFL, Butterfly Labs, or other products or services. And, a lot of people were like, cool, I'll invest in this. And 99% of those businesses died, but, it's a lot of these guys too. So if you survive the whole swamp of scams, you didn't put your money into a bad alt, or you didn't put your money into BFL, and you didn't spend money on your own startup, and you've got just the personal wealth issue, where a lot of folks who were early in Bitcoin weren't affluent. They didn't come from money. They didn't know what to do when they made all this money. So I've got a bunch of buddies who sold everything they had when they hit the $1 million mark. They're like, I'm a millionaire, I've made it, and I'm out. And, some of these guys, I remember one had 1,000 Bitcoin, and he sold it all right up to 2016, 2017 run up, because he's like, I made $1 million, I'm out.
There's a really good quote from Naval that I think is highly relevant here. He goes, to bootstrap a new money, create a religion around it. The core teaching is to hodl at all costs, no matter the temptation, until all unbelievers capitulate. And I feel like the story you were telling, Dan, about the guy who's like thinking in USD terms and thinking, okay, I'm a millionaire, I'm good to go, but not actually. He was essentially also signaling that he didn't fully get Bitcoin, which is that it is something that you hodl forever, which is kind of a segue to just like a kind of reset the room a little bit. At what point does one stop hodling? Just like a question for you guys.
It's a bottomless rabbit hole, right? Is that something else I mentioned recently, mainly because I've been reading a number of books about the topic, but there's a strong argument to be made that you should be looking at this from a multi-generational wealth building standpoint, and you should be doing everything you can to minimize your own burn of your current hodlings, because in future generations, it's going to be worth, orders of magnitude more than we're even at.
Yeah. By the way, one quick note that Clubhouse has a bug. You need to pause a little bit before muting yourself. Otherwise, it chops off the last sentence a little bit. But I completely agree, right? So I think the interesting thing, and I think if I would pinpoint like where and how my mental model changed, I think the mental model was really to stop thinking in terms of the Bitcoin price today at all, right? Like you need to pick like a frame of reference for what Bitcoin is worth to you, and this is just a model that works for me. Like it's basically like, let's take 10 Bitcoin, for example. Like, let's say you have 10 Bitcoin. You can't look at the price today to value the Bitcoin, right? You need your own internal model. Like maybe it's like, hey, it's worth $1 million, right? Then treat it as if it's like $10 million, or maybe it would be more or something like that, right? Similarly, I think like snapping out of the thinking in terms of USD and actually readjusting your mental models to think in terms of like Bitcoin, as Jameson is saying, like even in terms of generation planning, like if you think that how would these assets actually pass to next generations, and what are the tax implications there? Like I would hate it if there's a 40% estate tax issue when I'm dead and I'm trying to pass this asset on. So like you need to, like your Bitcoin should actually be in a trust, or maybe your Bitcoin should be in a jurisdiction where if you are trying to, I don't think most people should trade, but even if you're trying to do that, like maybe it's a more friendly jurisdiction for doing those things.
Yeah, I mean, you're not going to be able to beat the market consistently. So if you try to trade, you're just not going to beat it. And that's where I think Bitcoin has very much showed that hodling is the best way to.
Yeah, and this actually brings me to almost like infrastructure on Bitcoin, where I mean we've seen BlockFi has done a great job. Like you can actually lend your Bitcoin there. Yes, you're taking some amount of risk. But I think if Bitcoin really becomes this asset that you're not using it to buy coffee, that became clear, during 2016, 2017, and so on. And then now people are like, I don't want to sell this thing either, but I am happy to use it as collateral to take out other types of loans, like maybe like a digital dollar type of a loan, or I'm willing to lend it if you can do it in a trustless manner, right? And I can get some interest on that. So I feel like the more we get this type of infrastructure in place where you're removing the counterparty risk, like there are smart contracts that can help you take out a USD based loan with giving Bitcoin collateral, or the other way around, that you can lend your Bitcoin and earn an interest on it. I think that would be the point where it will actually become really easy for people to just hold their Bitcoin, because you can get liquidity through loans and you can actually have interest on top of their holding. So it wouldn't feel like this is just a passive holding and I'm actually not making any income on it.
Yeah, go ahead, Jameson.
I was just going to say, sometimes I feel like I'm almost sick in the head due to the result of me, seeing the properties of self-custody and self-sovereignty, because I might look at something and say, well, like, do I want this car? Do I want this house? I mean, I could sell some Bitcoin and get that thing, but then I'm going to take a big ding on capital gains taxes, and then B, I'm never truly going to own that other asset. If I buy some expensive house or car, then I'm still going to have to keep paying essentially wealth tax on that asset every year. Otherwise, it's going to get taken away from me. And I don't know, it's almost a sickness, because I feel like I can't actually truly own anything other than a digital asset that is protected by private keys.
Like I just really, really care about my grandchildren. It's a sickness. But yeah, that is kind of funny you say that. I mean, whenever I think about like large ticket asset sort of things like real estate, I'm like, well, real estate's not going to be worth as much as like Bitcoin or my own holdings. So why take the capital gains? Why spend it? And then I'm like, okay, well, I feel like I'm never going to spend it. It's like, oh, is this money for me? Like maybe my money's for my kids, you know? And that's just like a whole different sort of mindset than I had, you know, when I was even going through high school and college, you know, kind of thinking I'm going to build a career. If my kids are doing well, that's great. But, you know, I don't know about like intergenerational wealth or anything like that necessarily. I'm just more so thinking about myself. But I think like the frame of reference really did change for me over the past few years as Bitcoin just essentially proved that it's not going away. As a meme, it's infecting more people. It's going to install itself into more people's minds, and that's not going away either. And so you are really left with this decision that forces you to think into the long term. And it's funny because like your time preference actually gets longer and longer as you hodl. So like you hodl for 4 years, you're thinking when you first start hodling, you might say, you know, I think I'll sell when it's 2030. Then you hodl for a few years, and you're thinking maybe 2035, you know, maybe 2040. And I just think that as like a human behavior is probably like a net good thing, just generally speaking. But yeah, those are my thoughts.
Yeah, well, as you reduce your consumption, you allow for the consumption of these goods and services to be bought at a cheaper rate by everyone else in the world. So you are doing a net good for society by withholding your consumption and saving. It's kind of funny, like, you know, to Jameson's point, yeah, we can go buy a Lambo, but we're like, well, why would I want to do that? It definitely adds a huge distortion lens of thinking through, like, I could buy this thing, but what does that really mean to me? Is that going to make me happy? And then sometimes too, it kind of gets weird where through every one of these cycles, you add like a zero on your net worth, and you're like, okay, well, that's pretty cool. Well, I'm not going to go change what we're going to eat or something. There's only so many nice restaurants to go to, and you know, there's only so many types of cuisine you try. So there's only so many experiences you can have. So after a certain point, you're kind of just like, it's a game in a way, a game of life.
All right. So you spoke about, you know, what is going to make me happy. Obviously, everyone is going to have a different answer to that. For me, I generally tend to fall back to freedom. I'm always looking to increase my freedom. And really to speak to my earlier point, like my problem with buying physical assets is I feel like they're the opposite of freedom. They're an anchor that drags me down. They have their own maintenance costs. You never truly own them. They actually prevent you from having certain optionality and flexibility. For example, if you wanted to all of a sudden move to a different location, you're not going to be able to move your house with you. There's a whole slew of issues around that. And, it's all about the sovereign individual thesis, which I believe means that you need, if you want to take advantage of that, you need to be able to easily move between jurisdictions.
Yeah, maybe this is a good time, Jameson, to tell people about Casa as well. Like we're all talking about, hey, you want to keep your Bitcoin and you want to change your mental models, or maybe like at least we have changed our mental models, and here are the reasons why we have changed them. But then from a very practical perspective, if you're thinking of holding a digital asset for decades and a lot of your net worth is in that asset, like how do you secure it? And then what you're doing at Casa for helping that.
Yeah, so we've always had this promise, this ability to be our own bank with Bitcoin. But there's a reason that banks exist, and it's mainly specialization. The bankers, originally, they were the ones with the big vaults that you could put your gold in. And eventually they got to the point of offering all these other financial services that they specialized in as well, dealing with risk management and whatnot. And what it really comes down to is that people don't have time to worry about that. Just like the average person doesn't want to have to deal with things on the lower level of, I believe it's Maslow's hierarchy of needs. Like, you don't want to have to spend a lot of time worrying about your food source, for example. Not a lot of people are going to the extreme of creating their own food sources and farming and all this other stuff. And that's because you can be more productive if you are specializing in some sort of higher level task and you let other people specialize in those lower level tasks. So this kind of creates a bit of a conundrum if we want people to be specializing in doing key management and being their own bank. It simply won't seem like it's worth the trouble. So my perspective on this is that I always felt like it was worth the trouble, but in order to get other people to share my perspective, we need to lower the bar. We need to make it a lot less effort than it historically has been. So that's really what we're going for at Casa, is taking a lot of the best practices and things that I've learned over the years of really been steeped in the space 24/7 of private key management, and how do we build an experience around that really guides people into following the best practices without having to read lots of technical manuals or otherwise like boring key management material. So we basically try to put people in a position where they can use commonly purchase like Bitcoin security hardware, and then with a little bit of guidance from us advising them at Casa, help them distribute the keys on that hardware in a fashion that is distributed enough that essentially it protects you from pretty much every threat and loss vector that you can think about. And of course, there's 50 pages of technical documentation behind all the decisions we made for this, but what it really comes down to is providing a very user-friendly experience that gives people what is essentially a highly hardened and robust key management system that is still easy to use as a mobile app.
Awesome, that's super helpful. Patrick and Frankie, what do you think? Should we get some people to ask questions?
Sure. And while I bring some people up, I have a question. Okay, in some of these rooms, we have Bitcoin maxis who I feel like it's kind of like a joke. Like, if you're sitting in a chair, you're not hodling. And I guess my question, and really what they're saying is, if you own things, you're not like a very good hodler. And my question is, do you have to put 100% of your assets into Bitcoin to be a hodler? I know it might be silly, but I'm just curious, like, what is this, culture or this ethos behind hodling?
Well, no one should put 100% of their current assets into Bitcoin, but I would argue that even if you do the quote-unquote conservative rational investments of like less than 10%, single-digit percent, then eventually it will approach 100% of your assets if you are just holding over the long term and not trading and not doing other risky things. So when you see a number of these toxic maximalists or whatever who are espousing things that sound kind of crazy, it's because they have lived most likely a crazy experience that not many other people have seen, and that has, you could say it has warped their perspective. It has certainly given them a very different perspective than the average person who has not been in this space.
Okay, I appreciate that. Yeah, you're right. They may have gone through something, but when I hear them, kind of joke around in these rooms, I think, man, like, am I doing this wrong? Should I have?
I think you can like label the whole spectrum Bitcoiner, and on the far end of the spectrum is folks who would sell their house, sell their rugs, sell their couches for more Bitcoin, and live a very, very sort of Spartan lifestyle. But there's also a group of people in that spectrum who really, really understand Bitcoin and really, really want more of it, but don't have the funds to get more of it. And so they must put themselves into situations that are less than optimal to be able to stack as much Bitcoin as they want, as they can. Not everyone's able to stack that much.
Yeah, there's no magical threshold that turns you into a Bitcoiner. It's I think 1% to 100%. Those are all very
right.
Good
So
percentages.
I meant to mention on the other end of the spectrum is like people who start with like putting like 1% of their assets in Bitcoin. And as Jameson said, I think generally the asset performs well over time, such that the percentage becomes a large portion of their assets.
Yeah, at the end of the day, you've got a human body. Like there's the rational investing decision, and then there's one that's going to let you sleep at night. Trust me, as a long-term hodler going through a lot of ups and downs. I'm 33 and I've got like gray hairs in my beard already because I've seen my net worth go up exponentially and then drop 80% 3 times. So it's there's investing practically versus investing rationally. Like investing rationally, you're like, well, should I ever even own a home? Because it's a wealth tax in effect, a property tax, a wealth tax. And could I earn a higher rate of return in S&P, Bitcoin, or some other investment? The answer is likely yes. More than likely you'll outperform with any other asset. Real estate in select markets is a really great asset to own in terms of the price appreciation, but real estate as an asset, it's actually got a lot of liability to it. You've got maintenance costs, property tax, insurance. But at the same time, we're humans, so we want a home that we can call our own, right? You want to come back to some place and be like, I own this, and everything in it, all my furniture is going to be here for the next 10 years. And I've just rented. I've never owned anything, so it's a struggle that I go through mentally. But I can definitely understand when people don't go 100% into Bitcoin or even 50%, or they just put in 1%. I think that's totally fine. It's just, I'm a very risk-on individual, but not many people are like that.
Yeah, I think one important point about the HODL mentality is that it really kicks in when the markets turn, right? Like it's even in a bull market, if you're taking some money off the table, like yes, you might end up regretting it 5 years from now or something. But the real test is usually when the markets turn, and people who don't truly understand Bitcoin or don't truly believe in it, right? They would buy high and sell low and exit and leave, right? And then 5 years later regret that they did that. And I think sometimes they still don't get the like how drastically different this thing really is. And I think the HODL mentality is really about like not, again on Dan's point, like not exposing yourself so much that you are, you don't want to be in a situation where suicide hotlines are being posted on Reddit, and this happens like in the bear market, like where people are like, hey, you need to relax and not kind of like kill yourself because you've overexposed yourself to an asset that is now dropping as quickly as it was kind of like going up earlier, right? So it's a little bit of a calculated decision that I'm a long-term believer in what's possible here, and I am going to exit more like a one-way street. A certain percent of my net worth is exiting in a one-way street, and regardless of what happens in the markets, I'm not going to move. I'm just going to HODL for a long enough time period, and I think like that type of thing it can help people.
Yeah, I appreciate that. I feel like there's many in the room who haven't been through a bear market. So that character trait, what is it that we need to be a successful hodler through the bear market?
You just need to have something else to distract yourself with. This is what I credit. Like
that's called a job.
Yeah.
Yeah, I'm not a trader, I'm a builder. And like I said, I've been through a few market cycles, and I highly prefer the 2-year or so bear markets as a builder because it's nice and quiet. People aren't bothering me with stupid questions. You can get a lot more work done. And while, there is a fun aspect to some of the hype and craze that comes with the bull markets, it's so much more distracting. And I never really felt like I was going to panic and sell during the bear markets because I was just heads down building. And the price was not a distraction. It was actually a convenient relief from the bull market hype.
Yeah, plus one. So much build that in bear markets.
Yeah, I honestly feel less anxious in the bear market versus a bull run, because in a bull run it's a little bit surreal, especially now. like we were right. The whole world, including top institutions, they say we're right. That's actually kind of a bizarre feeling to feel. But it certainly, these bull runs also, you've got so much money being made everywhere, right? People buying alts and all 1,000 X's or something, that actually being a hodler during a bull run is even, in the bear market, you're fighting feelings of despair and failure and loss, like you're worried about losing. In the bull run, you're like, okay, well, I've made all these gains. And what you're going through, though, too, is there's a weird period of jealousy where you might look at an alt and be like, my buddy just YOLO'd into a really silly alt and it went up 1,000x. And, you're going to have this temptation, the sirens call of these alts. And so hodling in a bear market, I would say, is like equally as hard as hodling in a bull market. Like they're both equally as difficult for different reasons.
It goes back to, I don't know if it's Jameson saying that or Dan, the comment about mimesis. Like when the market is in a bear market, for some reason, I also think like even if you get that you should be accumulating, you might take your foot off the gas a little bit, or not have it so on your radar where you're like, I need to get this. And I think that's a function of the market, which is a function of essentially people copying each other.
I have a question here, actually. Something that's on my mind. And Dan, you mentioned that, there are all these other assets and some of them are people just aping into them and have seen returns. I think for me, I can very easily stay away from them, like, because even if something appreciates, but I don't believe in it, like I don't care. I don't care about making money on it. So like I have the mental model that worked for me there. But I think what I'm a little bit struggling with these days is like there are some projects where I know the teams, I know they're building something real. Like let's say it's a wireless mesh network, or it's some sort of a permanent archival storage, and I know that these people are genuine and honest, and they're really really building interesting things. And I want to be a part of the journey, and I want to kind of like, invest a little bit. But then I almost know in my gut that this is going to be a worse investment than Bitcoin, like long term. Like, and I struggle. Like every time I see the project and they're making progress, I'm like, yeah, I want to be a part of this. Like I want to wish that I invested a little bit and feel good about it. But it's the Bitcoin appreciation in other words, Bitcoin appreciation makes angel investing or supporting other things much harder. And I'm a little bit sad because of that. Like I wish that wasn't true. Like you could still, or maybe there's some nut I need to crack in terms of mental models for how to justify these types of activities.
Yeah, this is actually something that I've seen during fundraising is certain types of, usually it's the crypto investors, will sometimes ask the question, why will my investment in this project outperform? And you can't always, well, obviously you can't prove that it will, but the way that I see it, at least if it's a project in the Bitcoin space, is it's almost like the conundrum of investing in Coinbase seed round versus buying Bitcoin, right? You could argue that buying Bitcoin would have been a better ROI, but would it have been a better ROI if nobody had invested in Coinbase in the first place? So I think there's also an argument to be made that investing in infrastructure for the system, while that direct infrastructure investment may not have a better ROI, that it may amplify your broader ROI in the tokens in the kind of long run.
And really had a blast jamming y'all. I do have to hop I do have a full-time job at Kraken, so I've got to hop. But really had a blast. Thanks for having me.
Thank you, Dan.
Cheers, y'all.
We should probably invite some folks up just for like a question or two and then answer it.
Sure. Does anyone have any questions? You can come on up. And while we have someone. Oh, we have a few people actually. Awesome.
Hi there.
Hi, Ox. Go ahead.
Look, it's just firstly a thank you to everyone for sharing all that information, and a comment really for people that have come in late like I have and have FOMO, that it's such a marvelous thing that all the people that have gone before us have taken the risk out of it. So we shouldn't ever think about it as coming in late. We've had the terrific advantages of all the testing and losses and gains that those who've come before have made. And we should just be grateful that we're here now.
Yeah, thank you for that. Thank you. Hi, Bobby.
Hi, can you hear me?
Yes.
You were sort of touching on it at the end there. I don't know if that was Jameson or Dan, but this idea of this is like the best asset and going to be the best performing asset. I am super interested in like, what does that do to, I don't know if this is a whole different thing, but it makes me think of, like the way the system's been where people are incentivized to be in debt, I guess at the expense of building or at the expense of infrastructure and just like real things the world needs to operate. And I wonder, is there some sort of perverse incentive to where we're going to neglect, whatever actual products or things we need to build because they might not return more than holding Bitcoin would?
Yes,
I don't know if that's clear.
That makes sense. I think you could reinterpret that as like, does Bitcoin performing so well as an asset put sort of downward pressure on innovation or turn us into like technological regressives in some perverse way? Is that a fair way of rephrasing that?
Yeah, for sure.
Yeah, that's an interesting thought. Someone had some tweet related to how nation states and printing money and things like that have inflation, which creates like an embedded growth obligation. And I personally haven't like double clicked too far into that to have one say or another, but I think there's probably something there too that's interesting to touch on. Yeah, what do y'all think?
I mean, I think that it does place downward pressure on certain mindless consumption, really low time preference, perhaps entertaining or pleasurable things. At the end of the day, we are humans, we have needs. People are going to continue to need things like housing and transportation and so on and so forth. And I think that it raises the bar for what the level of value that the innovations are going to have to deliver in order to get people's interest.
Hey Peter, I like your hat. That's the topic of this group.
Thank you. Peter, by the way, great. It was you, I think, that did the interview with Eric Weinstein like a few nights ago.
Yeah, that was me.
And you navigated that really well, and I was left definitely feeling something after that. So thanks for that.
I'm glad I moved you.
Consider me moved.
Thanks, guys. And
I can add something to that, just following from Jameson, if you want.
Yes.
Not all Bitcoiners are created equal. Not all Bitcoiners have the same low time preference. Plenty of people will want to buy mindless shit. Not everybody is a Bitcoiner now. Not everyone will become a Bitcoiner next year. Some people might not become it for years. And over the years that we transition to more people becoming Bitcoiners, we will still have mindless high time preference people or people who just like to buy stupid shit. And I think there'll always be a market for it. So I think you might see a transition, but I think it's a very complex, chaotic marketplace for different currencies, of which Bitcoin is one, investment strategies, etc.
Still waiting to see when Peter is going to invest in a larger garage.
That's a good one. Peter, do you have a response?
That's a pretty standard sized garage in the UK, to be honest. We have a lot less land than you over in America. We have a very island with a lot of people. I think we've got about, a fifth of the size of the States in terms of population. But we're probably our whole country is probably the size of California or something stupid.
I'm sure the circumference of people is also smaller as well. Dylan, Chris, who wants to go next?
Yeah. Thanks for having me up stage. I was just thinking about what Muneeb was saying earlier. He said something along the lines that he wants to support all these innovative projects, all these new either even altcoins or just new startups, and it feels so bad because he knows deep down that investing in Bitcoin is just better. In the sense, it makes it hard to do sort of angel investing or investing in new things because you feel why am I investing in new innovation or new things when I can just put in Bitcoin and it has a really good return. So personally, I do this thing where I just put the bulk, maybe 70 to 80% of what I have in Bitcoin, and then maybe 20 to 30% I would treat it as I can support other projects too that I find innovative or I find exciting or I find new that might probably be a worse investment, but it's nice to know that you can gather your own resources to kind of help try out new things because you never know if something new might be good for the world, right?
Yeah, it's you should invest in what things you want to see in the world. Bitcoin can't get all the attention, even though it feels like that sometimes.
Yeah, but I think the point is that the struggle is real, right? I think this is something that probably the internet era entrepreneurs didn't, because they would make money and then they would go and they would plow that money directly into the next generation companies, right? Because they were holding dollars. Whereas in crypto, even people who are making exits or gains, especially the experienced ones, they actually know that Bitcoin is the safest place to park their money, right? And then the bar for getting somebody to sell their Bitcoin or give you Bitcoin into another project, I think there's a significant difference there. And I almost feel I want to almost flag that issue because you don't want stagnation to happen because people did not plow that money back into things that then were growing and were helping the overall ecosystem in the long term, right? I think that was a healthy thing that happened in Silicon Valley.
I think I'll just add on one way that we can kind of solve this is that encourage a lot of new startups and businesses to accept Bitcoin as their funding so that people who invested in Bitcoin can also contribute Bitcoin to these smaller businesses to start build things that you want to see in the world, right? So
awesome.
Instead of taking dollars, they take Bitcoin too.
Awesome. Thanks for your comment, Dylan. Hey, Chris.
Hey guys, thanks for inviting me up. Jameson, I got two questions for you real quick. When you started, you mentioned that you were locking down an iPhone. I was hoping you could just elaborate on that a little bit. And then number two, you talked about Casa, the way y'all basically eliminate the different attack vectors. If you could just elaborate on some of these vectors, probably the most popular, most common in your opinion.
Yeah, the first tricky thing was that I needed to create a throwaway Apple iCloud account that was not associated with my identity. I also got a SIM card for this phone that was not associated with my identity, which meant that I had to use some other throwaway payment mechanisms to order one from an international SIM company. Also had to figure out how to get a VPN on here. I've never done that before. Thankfully, it wasn't too complicated. And really, other than that, I am just minimizing what other software that I have on the iPhone in the first place. Normally, I'm not running a standard mobile operating system. I'm using a fairly obscure privacy flavor of Android for my daily driver. So I haven't really done many deep dives into iPhone security and privacy stuff. I generally try to avoid it because of the walled garden experience that generally limits the things that I can do on the platform in the first place. What was the second question?
The second question was the most common attack vectors.
Most common, well, it has changed over time. Are we talking Bitcoin specific attack vectors?
I think it's more about the Casa keys.
Well, like if you're self custodying or even Casa, y'all are a more robust system than just your average Joe self custody. But if you could speak to just the custody vectors.
So at a very high level, attack vectors are the kind of exciting thing to talk about, but the reality of the situation is you're far more likely to shoot yourself in the foot and screw up and lose your keys, essentially donating your Bitcoin to the ecosystem in general, making the rest of us a little bit wealthier. And that is not particularly sexy to talk about because they are all boring IT data practices related stuff. So not having good backups, not having like multiple redundant backups, and as a result, any number of normal day-to-day disasters, whether it's like a hard drive crash or even something like a fire or flood in your house that might destroy whatever computing device you were using to manage those keys. Those are the more common ways that people tend to lose access. And of course, this is because people create single points of failure. They're not creating multiple redundant backups of their keys. They're not distributing those backups around. And once again, this is just because people aren't tech experts. They don't think about extreme edge cases or disaster scenarios. They just use whatever is put in front of them and follow the directions in the app. And so, even if the app says, write down this seed phrase and put it in a safe place, there's a whole iceberg of best practices, knowledge that are hidden under that phrase, keep it in a safe place. So that's the biggest thing that we try to help you with at Casa, and that is achieved by having multiple different keys that are in multiple different locations.
Awesome. Thank you, Jameson. Thanks. Thank you, Chris. Hey guys, we're about 15 minutes past the hour and I want to be respectful of everyone's time. So I do appreciate you all on stage. I'm going to go ahead and let Patrick and Muneeb say their goodbyes. However, before I do, please follow Crypto Internet. Just click on the little green house. Next week, we have Why Bitcoin is Misunderstood. We will have Meltem Demirs joining us on stage to give us her understanding of this. And past that, we have How to Build on Bitcoin, a 3-part series where we tell you how you can also build on Bitcoin. Muneeb, Patrick?
Awesome. This was great. I feel like Jameson's last 2 topics, especially about privacy of your operating systems or devices or self-custody, I can probably jam with you on this for like 10 hours on each topic. I think we'll follow up separately on the deep end of the pool for those things. But I think in general, one thing I want to give a shout out to is we're trying to push for more innovation around Bitcoin. Recently, a new accelerator was announced that is going to write seed checks into 100 startups that are building on top of Bitcoin stacks. So if you're an engineer, if you're a developer, if you're an entrepreneur, you're looking for kind of getting started and building like interesting, cool things on top of Bitcoin, like you should definitely come talk to us. For more details, you could go to stacks.ac.
Yeah. That accelerator also has mentors like Eric Reese from the Lean Startup, Muneeb, Meltem, and some other folks. I actually have a $10,000 bet that there's going to be $1 billion protocol or startup that comes out of the first 2 cohorts. On Twitter, if you want to make that bet with me. Thanks, Peter, for joining us. Good chatting with you. Thanks, Bruce, Jameson, Chris, and Frankie. Thanks for hosting. You did a great job. Have a good one, y'all.
Good to see you.
Thanks.
Thank you.
Bye.
Take care, everyone.